I wish I would have bought Tesla at $380. I knew they were going to explode back up. But now it's over $700. I just missed it. Do you remember all that talk just a week ago? It may have come from friends, co-workers, remotely, or maybe even yourself like me. Well, I believe the market could deliver another opportunity, and I'm gonna lay it out for you right now. Welcome back, everyone. In this video, we will cover what are the repercussions of Elon's tweet, what other pressures are on Tesla stock, and what you should do right now. And if you like making money and you want to do so alongside a guy who wears a t-shirt with a stormtrooper on his toilet, go ahead and subscribe, hit that notifications bell, and while you're down there, go ahead and hit the like button as well. Well, May the 4th be with you for all you guys out there that, celebrate that kind of stuff. If you don't, well, you're missing out. But it looks like we're at a tipping point with this whole illness thing and the markets. But while everyone else is busy arguing about whether we should or should not reopen all the states, we should be preparing for another potential opportunity. If we ignore this or pretend it's not a possibility, then you won't be ready for the opportunity if it presents itself. So I believe we are seeing the signs of something bad coming, which will turn into something good. So let's dive in. What are the repercussions of Elon's tweet? There are two huge problems Elon just triggered with his behavior last week. The first, this is concerning a lot of investors out there. Tesla trades very frothy, and it's why big short sellers continue to stay short on Tesla. The valuations just don't make sense in regards to how you traditionally value a company versus its share price. And the only way mathematically you can really make sense of it is to project out 5 to 10 years, which is still a huge unknown, as we all know. So there is a portion of large investors, not you and I, but institutional type investors who saw this movie 2 years ago with his erratic behavior. And they may just decide to take their profits and not ride the Elon roller coaster for now. Look, they all know this is what happens with eccentric and brilliant people. And they also know they can take their ball and go home for a little bit, and then come back when he gets refocused or they feel he's refocused and buy the stock again. The second big problem with his tweet is that it's a violation of his agreement with the SEC. I know there's some debate out there as to whether he did or did not violate the agreement, and the line seems to be split right on the Tesla bulls, Tesla bears. But as I've looked at a few things that came from actual legal experts and people that deal with the SEC on a daily basis, they think there will be some repercussions for what he did. Basically, they just can't let him slide. They're going to give him something. And I don't think it's going to be anything big, and I don't think that's really where the problem is. If they determine he violated his agreement with the SEC and they fine him or something else, what really concerns me is how is he going to react? And here's why I'm a little bit worried. Not hugely worried, just a little bit worried. He has been very defiant during this whole pandemic. I mean, really defiant. Will he then take that anger and turn it towards the SEC and basically rebel? I really hope not. Unfortunately, if he does, he will lose. And it could mean greater repercussions in the short term. Now let me preface this by saying I do not think this will happen, but it is a possibility and it is something that we need to at least be aware of. If he gets himself into a prolonged fight with the SEC, or he just can't stay off Twitter, or he goes on rants about the SEC in interviews and decides to just violate all the terms of his previous agreement, the SEC has the power to remove Elon as the CEO and force him to take another role in the company. Like I said, I don't think this will happen, so calm down before you run to the comments. But let's play the scenario all the way through. If they remove him as CEO, it would be devastating for the stock in the short term. And if that were to happen, look out. Tesla back down to 180 or lower is possible. Now, like I said, this is highly unlikely, but it would be devastating if it did happen. Even though long term, it really wouldn't matter because he would be basically being the CEO anyways, even if his title was something else. I don't throw out whatever ridiculous title you want, but we all know he would be running the company. So long term, they would be fine. Short term, it would absolutely crush the stock. So what other pressures are on Tesla stock? So for this section, we're going to assume Elon's tweets were an aberration and he will go back to being on good behavior and smooth things over with the SEC. Smooth. I like my stocks smooth and frothy, which I believe is most likely the outcome of all of this. but I do potentially see 3 things that could put pressure on Tesla stock, assuming he stays off Twitter. The first, can Tesla outrun another stock market crash? We saw it in March. Tesla could not outrun the crash. They rebounded quickly, but they did not stay high while everyone else was crashing. They came down just like everybody else did. So I think it's reasonable to assume, whether we like it or not, Tesla is somewhat tied to the overall market if it loses steam. So if the overall market were to enter another market reset, it will trigger a lot of other not so obvious events. For example, you could see a lot of short-term debt being called due again, especially from hedge funds. As in that scenario, they would be forced to sell stocks to cover their positions, which creates even further downward pressure on prices. Keep in mind, there are trillions with a T, I think I got that right, of these short-term positions out there. And we saw them having to sell once already to cover down as stock prices fell. A significant dip in the market again, and it will trigger the same selling activity. It's one of the dangers of a system where so much leverage can be used. You don't think hedge funds and institutional investors aren't using leverage right now? Where do you think that money from the Fed is going? Are they using these loans to keep operations going like they should or shore up their balance sheets? Or is it a cheap loan that they can get and then take riskier positions to drive a greater return? I encourage everyone to read books about Wall Street, hedge funds, and all that good stuff if you haven't already. But I'll give you the really short version. Big money investors like hedge funds, who by the way invest with other people's money, not necessarily their own, care about one thing above all else: their bonus. And I can't blame them at all. When the bonuses are in the millions, what would you do? And that bonus is based strictly on the fee for the size of the positions and the return. A loan from the Fed allows them to increase both of those quickly and without more risk to the firm. The risk falls to the Fed and to the individuals that place money with them in the first place. So the guys running the hedge funds have actually eliminated their own personal risk and increased their short-term gain and bonus. Don't we all wish we could invest the same way? That would be awesome. I can increase the risk to everybody else, but not myself, but get more money? This is phenomenal. You guys want to start a hedge fund? We should start a hedge fund. And I think the short answer to if Tesla can continue running if the market turns around is a big no. The second, continued lockdown of the Fremont factory. Tesla and Elon are pushing hard to reopen the Fremont factory. I can't say the word factory. That's like the 4th time. It is the key to them hitting their numbers for the year. Tesla did not adjust their deliveries in their earnings call because if they can open the Fremont factory, it will allow them to produce enough cars to meet the delivery numbers. We all know Elon will do anything and everything to get those cars out, and with 7 months left in the year, I think Tesla would absolutely get it done. However, if California does not allow them back in the factory, especially for an elongated period of time, it will cause the stock to dip further, as Tesla is currently trading on the premise that it has a great chance of meeting its delivery numbers and all the rest of their numbers. If the Fremont factory closes for another month, can they still meet the numbers? No matter what we think, I think investors will start to price in Tesla missing those numbers or needing to revise those numbers, which will push the price down in the short term. And the third, failing to subscribe to my channel and hitting the like button if you're enjoying this video because it helps the algorithm. Okay, fine. That helps me and not Tesla. You got me. But there is a rumor going around about me and Elon partnering up together. So, just want you guys to be in the know. Latest rumor mill. The third for real, and I mean for real this time, is a failed reopening of the economy. I'm not going to get into the politics or anything else like that. I don't do politics. I vote with the Green Party. So I'm strictly looking at a real possibility as states start to reopen. No one knows how this will go. It could turn out to be great and everything goes back to normal. But there is a real risk here and I want to address it. So let's say the states reopen and we see a surge in cases forcing another shutdown of those states. And of course, the other states that did not reopen would probably just stay closed. If that happens, it would be devastating for the market and Tesla. I'll link my video at the end of this video if you want more specifics on what I see causing an overall market crash. But if we did have a failed reopening, I believe stocks tumble at a minimum, best case scenario, to where they were in the mid-March lows. with the probability being very high that we reach new lows. The Fed can pump trillions in, but this run-up was based on a best case scenario and a somewhat clearer path forward. If we have a failed reopening, everything would instantly become muddled again, essentially back to square one. How long would the new lockdown last? What would the response be from the government? What would the effect be on unemployment? No matter how you answer those questions, the reality is there would be great uncertainty. And uncertainty is one thing that we can all agree on that tanks markets. And I'm still concerned that we could see a huge dip in stocks just based on what Warren Buffett said this weekend. I got a little bit of hate down in the comments, and that's okay. Read into what Warren said. The guy's sitting on $138 billion, and he didn't see a single deal he wanted to buy. Not one stock that he wanted to buy. That's insane. This guy is a net buyer every time we have a market dip, and he saw nothing. And of course, Warren's not going to come out and say, I think the market's going to crash. If he said that, we would legitimately have had a crash today. May the 4th would not have been Star Wars Day. It would have been the day Warren Buffett took down the entire stock market. Unlike our boy Elon, I believe Warren fully understands how responsible he needs to be with what he says and how it affects the overall market. I'm not knocking Elon. No, he's awesome. He's a visionary, he's eccentric, that's what makes him so awesome. But Warren is very calculated with what he says. And even if he thought the market was gonna crash tomorrow to nothing, he would never say it. So what should you do right now? Now remember, this is for entertainment purposes only. I'm not giving you advice on when to buy or sell and at what price. I went to public school and I was not a good student, so take that how you will. So the first thing you need to do is hit that like button if you haven't already, as it's the easiest thing you can do right now. And it's the easiest because what you should do with your Tesla stock is a much harder question to answer. So I will tell you exactly what I am doing and why I'm doing it. Yes, I strongly believe there is a second correction coming and Tesla cannot avoid that downward pressure. I don't know when, I don't know where, I don't know how. I just think there's another shoe to drop in all this. But the good news is that creates a massive opportunity again. And I'm still super bullish on Tesla. This has nothing to do with me thinking Tesla is a bad bet or a stock that I just want to get rid of. Remember, I don't day trade and I don't swing trade. And prior to and during this pandemic, I have been building cash to invest. So if Tesla does ride a wave down, I will buy on the way down and lower my cost basis. And I'll probably be a little more aggressive this time around buying, as Tesla stock trades differently than the average stock. And I'll be honest, last time I tried to trade it like a regular stock and it didn't work out. It's just too up, down, up, down, up, down. Actually, it looks kind of cool. Sorry, I have ADD really bad. So for real-time trades that I make, those always happen over on Patreon, so check me out there if you're interested. But what am I gonna do with the shares that I already have? I will not be selling any of my Tesla stock. Let me repeat that. I will not be selling any of my Tesla stock. Despite all the bad stuff that's going on, I still feel this is a $1,500 stock at a minimum in 2 to 3 years. So even if I buy all my shares at 700, 750, 790, 800, whatever, I am still basically doubling my money, so I don't see any reason to sell. I'll just buy more and lower my cost basis. I would much rather have some shares at 700, 750, 800, whatever, than sell and play the what if game for the next few months. It's called FOMO and I hate it. Everybody hates it. That's why we have a FOMO group. So if you want in-depth analysis on why I see a crash coming, click this video right here to get it. Thanks.